All right. I see a lot of folks have joined us for today's Accelerating Community Capital webinar. So we are excited to go ahead and get started. Welcome to the final webinar in our 2011 Accelerating Community Capital series. My name is Alyssa Barron, and I serve as the Co-Managing Director and Network Services Director at BALLE. We're delighted to have you with us today. We had about 140 people register for the call from across North America and a couple of other places. So I'm going to review a bit of housekeeping and then we'll introduce our topic and speakers for today and turn it over to them. So if you're dialed in by phone but you have not yet joined us in the webinar room, please find a link in your reminder email from Allie Walker on the BALLE staff. Because of the number of call participants, we have the phone line muted. So if you have a question for the presenters at any time during the webinar, you can type your question in the public chat window. The presenters may answer a question during their presentation, but more likely will hold the questions until the end of the webinar when we have time set aside for moderated Q&A. If you have technical difficulties at any point during the webinar, you can note this in the chat window as a couple of folks are doing at the moment, and our staff member Allie Walker will private chat you to help solve that issue. Now the private chat over on the right side of your screen, you've got a public tab where you will see whatever comments you enter in, the whole community on the call can see. There's a private tab next to that. So if you get private chatted by Allie or anyone else, you will see a third tab pop up and flash red. So when you see that out of the corner of your eye, you know you have somebody coming to help with your technical problem. So our Community Capital webinars are held the first Tuesday of every month at this time, 10 a.m. Pacific. The series runs from February through December 2011, and we will be extending it through 2012. So we've got more information on our first couple of speakers in 2012. We'll be publicizing on our website and through our email list in the next couple of weeks. We're very excited to continue into next year. The series is co-hosted by RSF Social Finance and Slow Money. And additional series partners include the Association for Enterprise Opportunity, or AEO, Portfolio 21 Investments, and Investors Circle. Now, we're focused explicitly on tools you can take home and try out right away. So each month we feature a case study with a community capital innovator, someone or someones who have developed and piloted a working model for connecting local people's investments in businesses and farms to regional needs using regional resources. The innovators present their model, and then we allow time for dialogue and questions. So we suggest you treat these calls as an opportunity to bring together a group of business owners, social entrepreneurs, lenders, philanthropists, investors, anyone in your community who may be interested in the topic. After listening to the webinar, you can spend some time discussing with your group the applicability or relevancy to your community, and you won't have to pay the extra per attendee fee for the number, however many folks you have on the same webinar line. So again, stay tuned for more information soon about our lineup starting into 2012. But I want to just quickly introduce the folks we have with us today on our topic before turning it over to them to take us away. So we're going to be talking today about what happens after you move your money. How do you find that right institution? And once you are working with a local institution, what are a range of things that they can do to really advance your work and to partner with you deeply in creating a local living economy? So we're very excited to have a really innovative credit union and a very innovative local bank with us to represent the roles and particular motivations and strengths that credit unions and local banks each bring to community capital. And we're going to hear from both a little bit of an overview about the range of community capital offerings they have with some specifics. And then we're going to have time to not only talk about, as a group during Q&A, the kinds of services that they provide that are replicable in your community. We will also spend some time thinking about how to approach and partner with institutions like these in your place. So we'll go deep in their model and also use them as a sounding board for how to work with other innovators like them in your communities. So first we'll hear from Leslie Ackerman, who's the Director of Business Sense, or Community Enterprise Networking and Training Services at Alternatives Federal Credit Union in Ithaca, New York. Leslie has been a huge champion and co-founder of Local First Ithaca, the BALLE network in Ithaca, New York, wears many hats. We've got deeper bios of all of these folks on our website. Then we're going to move and we're going to hear from 3 folks from One Pacific Coast Bank and Foundation. We're going to hear from Kat Taylor, and we're going to hear from Dick Fletcher, Executive Vice President and Chief of the Chief Lending Office at the bank, and Erin Kilmer-Neel at One Pacific Coast Foundation. So they'll explain this unique partnership they have between the bank and the foundation. But without further ado, I would love to turn it over to our first presenter, Leslie, so we can dive right into the meat. So Leslie, I'm going to turn it over to you to set up your screen share, and then I will cue everybody on how to move through that.
All right, very good. Thank you.
So great. So now that Leslie has her slides pulled up, everybody should notice that some of your webinar features went away. So if you'll mouse up to the top of the screen, you'll see a little dialog bar pull down, and over toward the left you'll see an exit full screen button. So if you can't find it, it's no problem. When she's done presenting, you'll be popped back into the webinar. But if you go ahead and mouse up to the top of your screen, hit that exit full screen button, you'll be able to see her presentation and the chat window at the same time. All right, Leslie, take it away.
All right, thank you, Alyssa. Hi, everyone. Greetings from Alternatives. I am just thrilled to be part of this series and share some of our experiences here in Ithaca. What I'm going to do is start with a brief bit of background on Alternatives and how we've developed our programs and services, and then I'll go into detail on a couple of particular programs that I think can be potentially valuable transferable models for some of your communities and how you can adapt them to local situations. So there is our mission. We're going to refer back to that a few times. Background on us. Alternatives was founded in 1979 by the 3 folks you see there. They were entrepreneurs who were having trouble financing their businesses through traditional channels. They realized that there was a need for alternative financing structures, and Alternatives was formed initially as a community loan fund and then chartered as a credit union in 1980. So our earliest market, our earliest customer base was local small businesses, but it quickly became apparent that there was a whole other underserved market out there, namely individuals, families, households who were outside the banking mainstream, and these folks we now refer to as the unbanked. Forwarding through the next several decades, over these years as we grew and developed products and services to meet the needs of our members, particularly the unbanked, a conceptual model emerged that helped us to understand our members' different kinds of financial needs and to develop services in a more coordinated, targeted way. And I want to share this model with you because I think it may help you and some of your organizations do the same thing. You see it there before you. We call it the credit path, and the idea is that there's a continuum from unbanked to financially self-sufficient, and people at different stages have different kinds of financial needs. So the transactor is the unbanked guy. He's living day to day, maybe paycheck to paycheck, typically outside the formal banking world. And what this guy needs is affordable transaction services and hopefully a non-intimidating, non-predatory introduction to banking. The saver is using accounts, making regular deposits, big or small, and we're looking to develop services that will accommodate and encourage saving towards financial goals. The borrower is using credit, perhaps building a new credit history or perhaps repairing credit problems from the past. So productive and again non-predatory credit products are what we're trying to develop for this person's needs. The owner is building assets, whether it's a home or a business or a retirement nest egg or whatever. These are assets that will help build a foundation for ongoing financial stability. Now, people don't necessarily move through the stages in one direction the way you see on that little diagram, or in the same order. And as we've developed products and services with one stage in mind, we've sometimes found that they're just as beneficial to folks at other stages. In the real world, people might be spanning multiple stages at the same time. So you could reasonably ask, why is this relevant or useful as a model? What I think it does is shed light on this accelerating community capital conversation that we're having. If we see it in the context of the credit path, what we're talking about is how do we create saver and borrower type programs that help folks become owners? Or to put it a different way, how can we support and encourage saving and using productive credit to build assets for financial security and self-sufficiency? So I'm going to give you a couple of examples. One program that we would consider a saver stage program, and another that we would think of as a borrower stage program, that do just that encourage saving and using credit productively. And they're programs that are very adaptable to a variety of community needs. The first is IDAs, individual development accounts. What these are is matched savings accounts that are designed to help an individual save progressively towards an asset building goal. Excuse me. In our case at Alternatives, we have IDA programs for small business startup or expansion, for home ownership, for higher education. And IDAs have always challenged the notion that in particular poor people can't save. They can. The idea behind IDAs is that if someone has a meaningful asset goal to save for and the incentive and structure and support to do it, you better believe they'll find a way to save the money towards that goal. So the way they work is the participant will sit down with a financial counselor who will help them develop a realistic budget and a savings plan. And then over a period of time, they'll make regular deposits toward their asset goal. And typically along the way, an important piece of it is education. They'll participate in our money management class, and perhaps also asset-specific training like an entrepreneurship course, some of the business classes that I run if they're in it for small business, maybe a home buyer's class if they're saving towards a home purchase. When they reach their savings goal, they'll have not only their saved funds, but also the match money, which could be a 1-to-1 match or a 2-to-1 match or even as high as 4-to-1. So as one example, in our small business IDA program, the participants save up to $100,000, that would be great, $1,000 over a period of 1 to 2 years, and then they receive a 2-to-1 match for a total of $3,000 to invest in their business. The match funds for IDA programs have usually, or often anyway, they've come from federal grants, but local organizations and agencies and governments can also be sources of match funds. And this is one of the things that's so cool about IDAs. If you and your organization can source a potential pool of funds, you can design an IDA program to fit any set of needs or objectives you want. Whether you want to be flexible with income criteria, income eligibility criteria, you can define the savings limit, the match rate, the uses of the IDA funds. All of these could be customized to your community's identified needs. So for example, we have a small business IDA program that is specifically for entrepreneurs who live in the nearby town of Dryden. The Dryden town government had a little bit of money targeted for business development, and they thought an IDA would be a really cool incentive for Dryden residents. We have a community center that has a youth IDA program, and the kids on the center's track team save and receive match funds to buy running shoes. We've talked with the local community college about diverting some of their scholarship fund to create an IDA program for students to pay for their education. So there's no end to the possibilities of what an IDA could be used for. Moving on from IDAs, I want to talk now for a couple of minutes about a borrower stage program that we call community partnership lending. And this partnership lending is another really flexible model that we've adapted to a lot of different community uses. You might find some new ways to use it too. The gist of it is that you've got a partner organization, could be a social service agency, a community-based organization, in future maybe a BALLE network, and this organization has clients or members with a financing need. Often these are also folks who would have a hard time qualifying for loans through traditional banking channels. Now the organization has money to lend, or maybe they raise money that could be lent to these members, but they're not a financial institution, so realistically they don't have the capacity or infrastructure to make and administer a portfolio of loans. A portfolio of loans. So this is where they partner with us. What they'll do is put money on deposit with alternatives as a loan loss reserve, and we'll lend up to double that amount. So $10,000 on deposit, and we might make loans to their clients of up to $20,000. We help them develop lending criteria and policies, but they do the underwriting and they make the loan decisions. And what we do is provide an administrative home for the loans. We take the payments and process them, do all the loan servicing, even collections as needed. And the loan interest that the borrowers pay covers the cost of administering the program. So in the history of the program thus far, most of our partnership lending programs have been with human services agencies whose clients had borrowing needs like car loans for Wheels to Work programs, or loans for rental security deposits to get out of subsidized housing, for example. But again, one of the reasons I love this model is that it could be conceivably used for just about any financing need for any higher risk or underserved client group. So again, some local examples. We've talked with our community arts partnership, and they think, wouldn't it be cool to start a program for small loans to artists? And it's a perfect example of an entrepreneurship use for partnership lending. Artists are self-employed, often low income, without a steady stream of income. So they're a profession that's going to have a really hard time walking into a bank and qualifying for a business loan. We are right now in the process of putting together a community partnership lending program with the evolving Central New York Slow Money Group. The structure we're envisioning is that folks interested in investing in local food systems would be providing the capital that Slow Money would put on deposit for the loan loss reserve. And Slow Money would be the partner organization that would take the proposals and make decisions on the loans. But again, all of the pain in the neck stuff for loan servicing would be handled by alternatives. Excuse me. So here's where things get really cool. I don't have a slide on this, so you just have to envision it in your mind's eye. Imagine putting these two programs together, the IDA and the partnership lending. Over the years that I've been working with entrepreneurs, I've talked with a lot of people who have said, you know, this IDA thing sounds really great, but I need money now. I can't wait a year or 2 years to save the money for my business. So imagine combining a microloan with an IDA. The entrepreneur gets a small loan now, maybe a couple of $1,000s. As they repay the loan, they're making deposits into an IDA, which also acts as loan loss if they default. But if they don't, in a year or two when the loan is repaid, lo and behold, they've got an IDA with savings sitting there and a match for a second infusion of capital into their business. This isn't something we've done yet, but it's a next generation sort of vision that I think is a real example of how organizations and community financial institutions thinking together can meet really cool needs with creative programs. So my time is winding down. And with the last couple of minutes, I just want to make a couple of final comments that apply not to just the two programs that I've talked about, but to community capital in general. The first is to encourage thinking creatively about sources of money to support programs like these, and in particular looking for local pools of money. Because federal and state grant sources, which we've used a lot of, it's got to be said, but they're so vulnerable to the winds of political change. On the other hand, the good news is that programs like these community capital programs, are the kinds of bootstrappy, community investment programs that a lot of municipalities, foundations, sometimes even corporations and big banks will put money into. They make everyone look good. And so I'd say also look for pools of money that might already be earmarked for community development, particularly from local governments. $10,000 is too little to lure big box USA, but $10,000 is what created our IDA program with the town of Dryden. So it could go a long way. And finally, and this might be preaching to the choir, but with this audience, but the notion of community partners I think is really important, not just for something like a partnership lending program, but in the bigger picture with community capital. It's not enough for a BALLE network to partner with a credit union or a community bank. What we need to be doing to accelerate community capital is to engage with the full spectrum of organizations and agencies in our communities who are serving a really wide variety of clients, because as we've seen from the credit path, if there's one thing the credit path shows us, it's that people's financial needs are incredibly diverse. So for me, I think of accelerating community capital as much more than just investing in local business. It's about investing in people of all kinds and helping them move along the credit path towards financial stability and self-sufficiency. And a small investment can have a really big impact. So I hope your small investment of time with me and with the rest of us today gives you some big ideas of how to invest in your community and move them along the credit path. And with that, I'll turn it back over to Alyssa and take questions later on.
All right, thank you. So if folks have questions for Leslie, as this is fresh, feel free to note them in the chat window, and I will catalog them and then serve them up when we get to the Q&A portion. And this is a unique webinar for us. Often we go deep in one model for our time here, and we've asked the folks from Alternatives and One Pacific Coast to share the time because we felt like it was so critical to feature both the credit union and the bank perspective. So we appreciate, Leslie, for all you packed into that timing, and I want to turn it over to, again, the team of three from One Pacific Coast Bank. So just as Leslie herself is deeply rooted in the growing living economy in Ithaca, the folks at One Pacific Coast Bank have been a sponsor of BALLE, have come to the conference and share in this work with us. So we're delighted to have all three of you with us today. So Erin, I am going to turn it over to you to take your team through the presentation.
Great. Thank you so much, Alyssa. And hi to all my friends out there in the BALLE world. It's exciting to be here, kind of joining both my worlds, my local independent bank world and my local independent business world. And I'm just really excited to be here together. First thing I just wanted to do, all right, Alyssa, you're still working on the slide, right, to get it up?
I will
doing something?
pull it up for you.
Sorry.
There you go.
Thank you. So the first thing I just wanted to do is really express my excitement. This image that we're looking at together is from the Occupy movement here in Oakland. And we here at One Pacific Coast Bank and Foundation are right in the thick of it. And it's just so exciting to be part of what I truly feel is the solution, both on the BALLE side and on the banking side, that everyone is looking for, that they're moving from despondency to energy and looking for solutions. And shifting your shopping and moving your money are two of the really concrete things that people can do. And so I think we should all be really proud and really excited that we are all here working really hard to do that together. So just really quickly, I am from One Pacific Coast Foundation, and you'll also hear from Dick Fletcher, who's from One Pacific Coast Bank, and you'll hear, who's not on the slide listed here, you'll hear from Kat Taylor, who's the founder of the bank and foundation, so I'll be passing off to them. So real quickly, and I apologize for the font on the slide, it didn't translate perfectly, so there's a little bit of running over, but it's not too bad. So first I just wanted to give you a real quick history or understanding of our organizations. Our bank was founded in 2007 and is based in Oakland, was founded in Oakland, and merged this year with Shore Bank Pacific, who is a really mission-aligned, environmentally focused bank. And so now, not only are we serving Oakland, we're serving California, Washington, and Oregon as a whole. And the other thing I wanted to do really quickly was just explain what kind of a bank we are. Over the past couple of weeks with all of the Move Your Money activity, I've gotten a lot of questions from people who want to move their money, and they don't really know what the difference is between a bank or a credit union. So I just wanted to quickly explain what we are, and maybe in the question and answer session, Leslie can speak a little bit to credit unions as well so that you all get a good understanding of that. So we at One Pacific Coast Bank are a community bank, which means that we're an independent, locally owned and operated institution. So we're kind of like a BALLE bank. Our lending and services are focused on the local communities in which we reside. And community banks can be commercial banks, meaning that they focus on business lending, or they could be retail banks, meaning that they are focused on services for individuals like checking accounts and the things that we're all used to using at banks, or both, and we're both. And then, so that's kind of community bank. It's independently owned, it's locally focused, it does its lending locally. And then we're also a CDFI, as Leslie is as well. And that means a Community Development Financial Institution. That's an institution that's certified by the federal government to be to basically illustrate that that institution is mission driven, that it's really focused on serving traditionally underserved people and communities. And I think, and maybe when Kat or Dick speak, they can confirm, but I believe there are about 84 different CDFI banks across the country. So there aren't that many, but it's a unique structure and something to consider when you're potentially looking at moving your money. So what I wanted to move on really quickly to was just our mission and our vision. I did not write these, but I'm really passionate about them. I think that the team and the founders did such an amazing job of really focusing in on what is our organization about and our institution. And I'm just going to focus really quickly. I'm just going to kind of read the highlights of these so that we can point to them, and then I'm going to pass over to Kat in a second. So our mission is very similar actually to Alternatives, and I feel like they're a sister organization. It's pretty clear why Alyssa brought us together. It's to build prosperity in our communities in an economically and environmentally sustainable manner. And our vision is really exciting. It's to have a banking industry that is fair to the person with the least bargaining power, provides access to financial services for all of our communities, particularly the traditionally underserved, results in the long-term prosperity of responsible consumers, promotes the financial system stability, and contributes to the sustainability of the environmental commons. And we're calling this vision beneficial banking. And I just think it's really it's telling that this isn't just about what are we as a bank, but really about changing the world and changing our institutions and the financial structures in which we live. So with that, Kat, I am just going to pitch it over to you to speak about the structure of the bank and foundation.
Okay. Thank you. And to reiterate, another way of thinking about the vision for the whole banking industry is this is really our industry to hold and change to be beneficial to us. Banking exists to facilitate commerce, and it enjoys, banking and credit unions as well, enjoy a very large privilege from the U.S. taxpayer, which is deposit insurance. So the FDIC insures deposit holders in banks and credit unions, currently up to $250,000. But that's to motivate deposit holders, deposit makers, to put their money in banks and credit unions where it leverages capital to extend the reach of that capital more broadly and deeply. In exchange for that privilege, banks and credit unions are really supposed to be doing three things, which have been touched upon in the prior presentation too. The first is to facilitate transactions in commerce, and commerce broadly writ by community development as well. But transactional services, to provide a means for savings and wealth creation, that's number two. And number three is to finance, meaning provide credit or borrowings to constructive societal activities, be they businesses, social ventures, nonprofits, community facilities, even ecological systems development. We take that our responsibilities very seriously, that derives from that privilege extended by the taxpayer. And that's how we come up with our view of what beneficial banking is. When we established the bank, it was capitalized with private capital, which had no desire to profit from or even appear to profit from the banking activity. And so the economic rights of the bank were given at conception to a foundation of the same name. This allies the capital motive with societal motives, so there is no private profit-taking, no incentive to be extractive. It's really a wonderful feedback loop where if and when the bank makes profits that it doesn't need for organic growth, those profits can be distributed to the foundation in the form of dividends, which can then be granted out to the communities and environment on which we all depend. Erin, did you want me to touch on anything else?
No, I think that's great. Sorry, I'm just unmuting us so that we're not making too much noise. So what thank you, Kat. That's it's so inspiring to have Kat around on a regular basis to keep us all motivated by the vision. And now I'm going to turn over to Dick Fletcher here at the bank, who's going to talk about one of the ways in which we're really trying to give back to the community and one of the original reasons for the bank.
Thanks very much, Erin. I'm pleased to be speaking to the group here. It's interesting, when we talk with prospective depositors and also prospective borrowers, one of the major points that I like to make in talking with them is, unlike other larger banks, when you put your money with a CDFI, Community Development Financial Institution, and a bank such as One PacificCoast Bank, you know where your money is and you know where it's going. It's going to be going to support local small businesses and local community organizations and nonprofits, and that's exclusively where it's going. We exist as a bank to provide capital to small business owners and to nonprofit organizations and other community development organizations. We look at small businesses as a source of jobs, as the engine of economic growth in the country and in our regions. And we try to focus on companies or organizations that have revenues somewhere between the $1 million and the $10 million range. And having said that, we'll go above that, we'll go below that, depending on where the need is and what the benefit to the community or to the company would be. We're very serious about measuring and putting our money to those types of organizations that are consistent with our mission. Every quarter we review the portfolio, the loan portfolio that we have, and we try to break it out in terms of its applicability to our social mission. We'll look and see what percentage of our loans are in LMI or low and moderate income areas, what percentage are supporting companies or nonprofits that have a green mission or alternative energy, women and minority-owned businesses, nonprofit organizations, affordable housing, and neighborhood stabilization. So we try to make sure that we are, again, investing our banks and our depositors' funds in these types of companies and organizations that are consistent with what we were created for. And at the end of the third quarter of this year, we calculated that we had close to 75% of the outstanding loans that in our portfolio that are helping support companies that have at least that fit into at least one of these categories in terms of our social mission metrics. I think also a couple of the things that our bank is unique in, like many of the smaller community banks, We take a very proactive and a very personal one-on-one relationship with our clients. We're able to sit down with businesses and organizations and review their situation, and not just work with them in solving an immediate need and providing a product, but also working strategically over time to see what the additional capital needs or the additional growth needs are. We're also very fortunate to have an affiliate with the organization called Bright Path Capital, which is a source of which can be a source of equity for many of these growing businesses. And as you can imagine, in that particular space that we're in, we're working with companies that are getting on an annual basis, growing rapidly in some cases, and needing the capital to expand to that next level. I think we've been impressed in the few years that we have been around and coming into being right at the beginning of the economic crisis, with the strength and the resiliency of the portfolio that we have found, both that we bank and that we know that is out in our community that we're looking to work with in the future. I know there's a couple of unique aspects that we work with in terms of partnerships, and I'm thinking, Kat, I may turn it back over to you to talk a little bit about some of the work that we've done in working with other foundations and some of the peer lending circles, some of the forums that we've put together that cover different topics that I think would be of interest to the group. So I'm going to turn it back over to you, Kat.
Love to. Thank you. The foundation, One Pacific Coast Foundation, owns the economic rights of the bank, and it's created a really unique partnership with the bank in that it can use its own capital and resources to support the bank's activities, including product development, and it also can attract other supporters of those efforts, foundations and other nonprofits who want to be part of that. I'll give a case in point. We have worked with the Marin Community Foundation to develop a competitive alternative to payday lending. Payday lending is a very pernicious phenomenon in communities because of the structure of those loans. They turn over every 2 weeks, and the borrower incurs an application fee every 2 weeks, and it results in there being an APR of close to 500% on them. They can be highly debilitating, trapping someone in debt that really undoes a lot of the rest of their life. By the same token, there is a legitimate need for emergency short-term credit by everyone, and there has not been a lot of alternatives to payday lending. So we have just launched in pilot a product called the PALLE loan, a friendly emergency loan. It's amortized over 8, 10, or 12 months, depending on the amount of the loan, $500, $750, or $1,000. And is an affordable product that allows someone to pay back on a cycle that's manageable with their income level. This is a subject of great interest to a lot of large community foundations because they recognize the pernicious phenomenon in their communities, and we need to provide an alternative, not only for the consumers who need it, but also to get to a policy end that's tolerable. In the state of California, it's been very hard to apply, much less pass, usury laws that would outlaw the most pernicious examples of this, and partly because of the answer that people need this sort of short-term debt. If we can establish a competitive, responsible product, it will help policymakers come to a better end against a very powerful lobby. We also work with foundations on other broader community development efforts. We have a partnership with Self-Help Credit Union on a neighborhood stabilization program where we're helping responsible developers turn back blight in communities that experience heavy foreclosure and create a product of a lease-to-own program where low-income homeowners, renters can come in for the possibility of one day owning a home. And we're just getting busy on a rapid rehousing initiative to see if, in the face of necessary neighborhood redevelopment, can find soft landings for displaced occupants of what has been the other giant phenomenon of our time, which is the housing crisis. I'll leave it at that as just at least a few examples.
All right, and One Pacific Coast Bank, folks, you're just about right at time if you want to kind of offer a couple closing thoughts, and then we can always go deeper in Q&A.
Yeah, great. Thank you so much, Alyssa. I would just close with, we talked about some options that we have for individuals and some options that we have for serving mission-aligned businesses. And I just wanted to throw out there for BALLE chapters that one thing that we started was a new credit card program that is through the Independent Community Bankers Association. And so that means that when you get a credit card with us or you get a credit card with a credit union, that you're supporting the local community rather than supporting some of the big banks in a more multinational structure. And then in addition to that, that we have affinity cards so that you're not only, you can support partners through that. And the reason why I bring that up is because Independent Community Bankers Association is national. So there are community banks, across the country and credit unions across the country that you could be another way that you can move your money is not just through deposits, but through credit cards and getting mission-aligned credit cards. And so the Independent Community Bankers Association offers us that opportunity to be credit card offers. So I will close with that. I did throw some resources on the slide. The slides are a little light, but there's the Independent Community Bankers Association, the Community Development Bankers Association, and the National Credit Union Administration if you want to learn more about sort of structure stuff. And that's it. Thank you so much for the opportunity.
All right. Thank you, everybody. Well, we've had some questions coming in, so I will invite all of our presenters to come off mute. I'll serve questions up to you. We'll see as many questions as we can get through in the time we've still got here. And then as a reminder to folks, we will send a copy of the presentations as well as a log of the chat window and a recording link where you could re-listen live. Or not live, but re-listen to the whole thing, visual and audio, after the call. So stay tuned for that. I want to start with a big picture question that came in that I think stems from the premise for wanting to have this conversation today regarding moving your money. So and that question is, what ways are credit unions, community banks, and CDFIs connected to or dependent on the larger mainstream financial system which you guys are working so hard to improve upon? So I'll start with you, Leslie, if you want to offer any thoughts, and then go to the One Pacific Coast Bank folks.
Sure, thanks. I just posted a partial, very just scratching the surface kind of response. And that was to do with some of the processing type needs that smaller or independent credit unions and financial institutions can't necessarily do themselves, so they rely on what we call, in our case, corporate credit unions, and those are the credit unions to the credit unions that take care of some of these needs. Those would also include things like check processing and credit card merchant services, things like that. Some of these guys made risky investments and lost a fair amount of money in the last couple of years, and that's going to have an impact on their member credit unions. But the good news is that most of the small community banks and the credit unions have generally made less risky investments in, for example, the housing market and so forth. So most of us, many of us anyway, are on solid footing. The independence of credit unions and community banks is something that's really important, I think, to all of us. It's why we are banking where we're banking. Credit unions are member-owned cooperatives, and they are not-for-profits, all of them. And just like a cooperative, the members have control, and so they're not going to be looking at seeking investment from outside owners, Wall Street, et cetera. I could probably ramble in a lot of different other ways about how we're all linked into the big picture, but I guess I'll stop there and see if there's any other specifics that someone wants to know about.
All right, and so for the One Pacific Coast folks, we started with a broad question, which is what ways are credit unions, community banks, and CDFIs connected to or dependent on the larger mainstream financial system we are working to change? I know you dropped off the line, so that's a question if you could take a quick crack at that. Of course, it's a big question.
It is a big question. Well, this is Dick Fletcher speaking. Well, we are interdependent in a lot of ways, and I think it's fair to say that that the health of the overall financial system and the larger banks, certainly has an impact on the overall strength and the overall ability of smaller financial institutions like ourselves to provide the types of services that we do. Yes, systems and networks require the type of investment, the type of technology that frankly, larger banks and larger institutions have been able to pave the way on and do a lot of the early on leading and bleeding edge technology that smaller banks have been able to adapt to. But I will say that community banks and community development financial institutions, I think, have been very nimble and very adept at finding many of the spaces where whether that be a technology gap or a lending gap or a deposit product gap. Kat mentioned the payday alternative loan product. I mean, that is really why that's really the bread and butter of why the CDFIs exist. And I think our goal is to become complementary to the overall health of the financial system, but also to make sure that we're serving what I think is a growing population, both in consumers and businesses, that are looking for slightly different services and a slightly different attitude from the financial institutions that they work with.
Thank you. I know that that, of course, is that question gets to the heart of all that we are trying to do, and is quite complex. So I appreciate Leslie and Dick, you wading in a little bit with some framing thoughts. There have been a number of questions going back and forth about the CDFI process of insuring funds. There's been some conversation back and forth, so I'm going to let folks view the chat window for those details. And I want to ask a question of the One Pacific Coast folks, since we're a movement that is really looking to re-regionalize a number of industries, but to get as local as we can. How much influence do the local branches of One Pacific Coast have in deciding where the funds go? Can you talk a little bit about whether the funds are spread evenly across the different communities you serve on the West Coast? How does that work?
That's a good question. Now, when you say funds, as the chief lending officer, I naturally kind of fall back to thinking about the capital that we provide in terms of loan funds. So let me just address that. We have 4 different offices or 4 different branches within the bank. One here in Oakland, and which serves the Bay Area and San Francisco. In Portland, Oregon, Seattle, Washington, and Ilwaco, Washington, which is a small fishing village on the West Coast at the mouth of the Columbia River. And if you were to look at the loan portfolios in each of those areas, you're going to find that they are going to be about, I would say, 100% distributed within. I'm just talking off the top of my head. If not a 30-mile radius, about a 50-mile radius within the heart of those branches. So that's really what I mean when I say where is your money and where is it working for you. With a larger bank, it could be anywhere. I mean, it could be resolving the Greek debt crisis. It could be paying a lobbyist in Washington. But with our bank, you know that it's going to be invested and it's going to be lent out into the community.
Thank you, Dick. I have another question for both of you, and we'll do first to Leslie and then to the One Pacific Coast folks. So we had a participant say, I know something if I'm I know a little bit about how it works if I fund in, say, something that's a public stock that's listed. How do I know about the state of my investment in an alternatives product or a One Pacific Coast product? So I think that question is really, what kind of information do you provide back to borrowers? It gets a little bit to well, I'll let you jump in.
Sure. Thanks. The question actually, or the answer that I'll give actually addresses a couple of questions that people asked. A credit union being a cooperative, a member-owned cooperative, isn't going to be seeking investment in the same way that a publicly traded bank might. Any member of the credit union, that is to say anyone who opens accounts, becomes a member of the credit union and is thereby an owner. The funds that they're going to put in could be in certificates or other kinds of long-term deposits, which is for most credit unions the base of where a lot of our lending capital is coming from. We've got on the docks, if you would, or no, what's the expression? in development anyway, coming through very soon, a certificate account that would be focused for local food system lending and potentially for green energy lending. Now, the nature of where your money goes when you put it in a credit union, even if it's not going in a specially designated certificate like this, is it's still going into the credit union's assets and pools for lending. So you're not going to necessarily get a report like you would if you own stock in an investment that says you've made X% and your share prices are worth this much, because it's kind of apples and oranges. We're not really talking about the same kind of investment. What we're really telling folks is that in a more general sense, when you put your money in a credit union, you're investing in community, because the money that you've put on deposit with us, we're going to use to make loans to the community. So we can't break it out in a broad sense in how much, what's the percent and what's the dividends that you've earned in the same way you would with a more traditional kind of investment. It's as much a philosophical investment in the big picture. The specifics of where your money goes might have some different subtleties depending on if you invest in a specific loan fund. That might have only scratched the surface of the question.
So what about you folks at One Pacific Coast? Go ahead.
So we are not publicly traded, and we have only one provider of capital. So we don't have an analogous situation to a publicly traded bank. However, we have stakeholders for whom we need to report results across our triple bottom line. And those stakeholders include the foundation that owns us, the depositors who place certificates of deposit or transactional deposit accounts with us, and also our community partners and the community at large. We are working on an annual report to convey that information more handily. Banks, because we're federally chartered savings bank regulated by the OCC, you can find out about the health and soundness of a bank through the FDIC website and call reports and things like that. But we need to report on our financial sustainability, our environmental successes, and our social justice benefits. And we'll be hoping to post that on the website soon.
All right, thank you, Kat. And I know there have also been some questions about CDFIs and the certification process. I think we'll be exploring in a 2012 detailed webinar what exactly is a CDFI, how are CDFIs increasingly working with unaccredited investors, so we can go deeper in that later. While we've got all of you on the phone, we've had a couple of questions about how you think as financial institution representatives about some other community capital innovations that are out there in the world, like community currencies, which I know can be a really interesting topic of debate with some folks. So we also had somebody ask about mutual credit clearing services. Let's start with the community currencies piece. of course, you've got a local currency there in Ithaca. So I'll start with you, Leslie. What do you think about community currencies, and how does that bump up against what you do as a credit union?
An interesting question. One of the board members of Local First Ithaca is also the executive director of Ithaca Hours, which is our local currency. I think that on our end here in Ithaca, the use of Ithaca Hours has had some challenges because what it really requires is getting them circulated. And it becomes a chicken-egg kind of situation. You can get lots of hours out there, or whatever your local currency is, but if people don't have enough places where they can spend it, if you can't keep the money circulating, then it all stagnates and it stockpiles among the few places who will take it. And we had one pretty charismatic leader some years back who kept things going. He really worked super hard to get lots of independent businesses and vendors to take it. And when he left town, things stagnated. And so we're now working to, and Local First Ithaca has been involved in this, and Alternatives has tried to assist as well, to try to get them back in action and back in circulation. And it really takes a critical mass and a lot of places that they can be used and traded. One of the things that is coming through the pipeline, I think, in development right now with Ithaca Hours and probably with some other currencies, is to work a debit card version, work some kind of electronic version of the local currency and ways it can be accepted and traded, because that's going to make it a lot easier for folks who have previously said, well, I've got this stack of this funny looking Monopoly money in my wallet and it's kind of annoying. So I don't want to make predictions about where that's going to go, but with the collaboration of a number of different organizations, I think we're already getting more momentum back up. And the key advantage of local currencies is they guarantee that the money that is spent that way is going to be cycling within the community, because I certainly can't take my Ithaca Hours to Big Box USA. And when I use them, I'm going to use them with a local independent business.
Thank you, Leslie. I know that there have been, I think, over 80 complementary currencies that have come online in the last decade or two, and a lot of them are no longer still around. So it's helpful to hear your perspective and what's happening in Ithaca. One Pacific Coast folks, I'd love to give you a minute to add any other reflections, and then I want to do a call wrap-up and talk about what we can do about all these questions we haven't quite gotten to yet. So any thoughts about complementary currencies or other innovations out there in the space that you're watching?
Sure.
So will you talk about, oh good, are you talking about Oakland?
Yeah. So as wearing the hat of the BALLE network and One Pacific Coast, One Pacific Coast is actually a sponsor of the sort of stepping stone to local currency that Oakland is working on through the Sustainable Business Alliance in Oakland Grown, called the Oakland Gift Card. And so that is similar to what Leslie is saying, creating a digital version of a local currency. So it's one gift card that can only be used at locally owned independent businesses and artists. And that is, it's not a complete local currency, because once that card gets swiped and spent at a local business, that business uses it as US dollars. But that first stage of recirculating the money, all of that money, any money that gets spent on it gets spent at local independent businesses. So the bank and foundation are jointly sponsoring that card, and the money on that card is banked here. And the processing is outside of the Visa MasterCard network. It's all processed through a local processor. So that's keeping a lot of money in the local economy. And then we're also talking to the people who are working on taking that to the next step and making a full digital local currency here in Oakland that they're for now calling the Acorn, because that was the currency used by Native Americans here in the Bay Area. So it's really exciting, and I expect us to continue to partner and see how that grows.
All right, thank you. So I know we've had a number of questions folks have been raising that have been answered by our presenters in the chat window as we've gone along, and then there's some we haven't gotten to yet. So what I'd like to offer is that BALLE can catalog all of the questions that haven't yet been offered and put them to our presenters. And when we send out in a couple of days the materials, the links to the call materials and the call recording and the chat window, will give you an ETA on some written answers if I can impose upon our already gracious speakers who've shared their time with us today. So I think for any questions we didn't get to, we'll see if we can get just a little more time from our presenters to answer those. We can send those to you in aggregate after the call. We'll see how far we can get with that. And I just want to thank everybody for joining the conversation today. I really want to thank Kat and Dick and Erin and Leslie for caring so much about community capital and working through institutions that are really partnering on the ground to help bring living economies into life. We also, for all of you on the call, are seeking topics for our 2012 webinar series and our full-day workshop intensive in Grand Rapids in May. So you can send those along to me, Alyssa, A-L-I-S-S-A, at livingeconomies.org, or anyone on the BALLE staff. So thank you, everybody. I know we've run a couple of minutes over. Appreciate you joining with us in this ongoing dialogue, and we'll hopefully join you again next month on the next webinar. So thanks and have a great day.
Thank you.
Thank you.